Good evening all. This side Rahul Magan here is Group Chief Executive Officer of Treasury Consulting PT Limited and also a venture capitalist. Today we are going to be talking about a topic which is the future of the banking, whereby we have divided this topic into three parts. Future of banking with respect to the technologies which are coming, with respect to the changing in the banking models, and of course banking model with respect to the revenue. And last but not the least, how exactly what would be the top two or three offices that would be left in banking. As you very well understand that we are having, I myself served as a head of treasury for American entity for 10 years, and currently also I am managing my own treasury. Well, sitting in Singapore, once you look around, you see that banking is all set to change. There is no doubt about that. What you have now, you might not be there 3 years down the line. Now, few years ago, UBS made a prediction that more than 50% of the back office jobs would wind up by 2020. I am saying that probably by 2021 or 22, might be 23, back office might not be there himself as well. So let's talk topic by topic. Number one, what are the technologies that are hitting banking? Now, first of all, bank need to understand that the body shopping business is a history now. So first it was KPO, then LPO, then ITES services. Now the bank need to understand that the body shopping business is a history. So gone are the days when bank used to hire thousands and thousands of people giving a title as a business analyst, financial analyst, relationship manager, senior relationship manager, director, followed by partner, and then go to CMD and so. So this body shopping business is over. The reason is two. Number one, we are on automation. When we're talking about automation, we are working on machine learning. In machine learning, it's pattern detection and probabilistic future understanding. Now we need to appreciate that now there is so much action which is happening in the machine learning, especially in the Singapore, that I might not be surprised that probably I think it's yesterday or day before yesterday, DPS launched the robo advisor in investment. They have to, because you are in Singapore. If you don't do that, you are history. We also need to appreciate one fact very clearly, that banks in Singapore and Southeast Asia region, especially Singapore, Hong Kong, Dubai, they are very well aware of the fact that if they don't change, then they are gone. They are history, because government in these countries, especially Singapore, are well aware of the fact that anything new comes in technology, they will first adopt that. So even if few thousand jobs will go away, then that doesn't matter, government have to adopt that. So government is pretty strict. It's not India, where people are talking too much about something which really do not matter. So on a technological side, machine learning will rule the show, will rule the show. And machine learning, you can I would say you can misnomally refer this as an automation. Machine learning would make sure that at least 10 to 15% of the jobs in the banking would go. And one area where I see that machine learning would have a substantial impact in the near 5 years time, which is the fixed income, foreign exchange, CCP and custody. I personally feel that custody as a concept itself would go probably 10 years down the line. So like several years ago, people were not aware about the custody. They were not sure what exactly is custody all about, how exactly the custody work, what custodians do, why do we need the different regulations by regulator to manage the custody and to manage the bank. Well, I'm sure that for most of the people, those who are watching this video, they might not be aware about the difference between the bank and the custody business. So they themselves not sure that BNY Mellon, Bank for New York Mellon, is a bank in itself and it's also a custody business. DBS, bank and custody. Citi, Standard Chartered, UBS, Barclays. The only exception we have is the State Street. So on all fronts, you will see that machine learning will come and machine learning would rule the show. Of course, there are a lot of interpretation issue, and also we need to see that how regulator will approve that. It would be very big responsibility on the shoulders of Monetary Authority of Singapore to come into the picture and see that till what level they approve. But being in Singapore and one of the best regulators of the globe, we are certain of the fact that Monetary Authority of Singapore will make the justice like they did last in several instances, and they would take up this job seriously, and I don't think there is much time which is left for Monetary Authority of Singapore as well to take up this seriously. While on the contrary, blockchain will hit the show. I'm pretty sure of the fact that messaging systems will change. As you can visit the Standard Chartered Bank website of Hong Kong, you can also do the testing. You open Google and type SCB Hong Kong website, you will get to know that you are talking with the chat messenger. So gone are the days when people used to hire an executive level who sits at the back end, who used to reply on your queries. Now it is history. It is the chat boxes which are happening, which are AI driven, artificial intelligence driven. Now these chat boxes will reply you, and of course there are multiple question and answer set how they are replying. So one thing is machine learning, and I'm pretty sure that machine learning will surely be killing not less than 20% of the population in the banking. The chop off is bound to happen, that is for sure, and especially in Singapore and the Southeast Asia region. I strongly believe that Indian banking would continue to be what it is because this is an obsolete banking and regulator himself is not interested to make any change. So nothing best you can do in India. Let's move to the another topic, that what would be the risk strategies for a bank to mitigate that. Now, banks in Singapore and Southeast Asia region, and especially in US as well to an extent, they have the following risk mitigation strategies. Number one, either they can continue with the current flow and they wait for the time when the boom will happen. When the boom happens, then thousands and thousands of people will go. Year 2008 is an example of boom when several thousand jobs lost it only because of the mistake by the Lehman Brothers. It's nothing but the contingent crisis. Another strategy for banks, which at least the banks are doing in Singapore, is that not fastly but slowly they are changing. They know very well that if they don't change, they will at the dead end of the road, and here they might not be able to have anything, right? So slowly banks are adding, like Standard Chartered Bank is heavily, DBS heavily, all other banks of the globe are heavily into automation, into artificial intelligence. But one thing which I personally feel, and I would have an interpretation issue with the regulator and also with the bank, is till what extent artificial intelligence can be applied in the trading section of the bank. Because when bank declare the results, either it's the Goldman Sachs, Credit Suisse, Standard Chartered, we need to appreciate that one important thing which we see in that P&L, profit and loss of the bank, is the trading income. Goldman Sachs is being a consistent performer as far as the trading income is concerned. Without quoting the name, we have number of banks, those who've done and dusted as far as the trading is concerned. We need to see that how the big banks, the G3 banks, Goldman, Standard Chartered, Chase, how these 3 or 4 banks will take up the role of the AI in the trading. That we seriously need to see, until what extent the regulator is comfortable as far as that role is concerned. Here comes that how the banking would be in nearby. Practically speaking, sitting on 3rd March 2019, we have 4 offices in bank. One is, in fact, not all the banks have 4 offices, only few banks have 4 offices. One is front office, middle office, back office, and 4th one, which is slowly coming up, is the risk office. We also need to appreciate that front office will continue to be what it is, but job loss will surely happen, but the quantum would be very limited. The reason being, front office is, I'm from front office side for 10 years, so I can give you surety that not more than 10% job losses would happen. But of course, this will put a pressure on the traders to learn new things, until what extent they would be able to adopt the new technologies like blockchain, virtual reality, cryptocurrency, the trading of crypto desk and all. I don't know. The reason being, we well understand that Chase has launched their coin, JP Morgan Chase, and I'm sure that at least top 4 or 5 banks like Goldman Sachs, Standard Chartered, HSBC, UBS, Barclays, Credit Suisse, they would surely replicate that. And when they would be replicating that, we are very sure that since the coin would be a commodity. Generally, apart from few banks in the globe, not every bank is offering the trading of crypto, and not many people are actually used to know how the crypto is actually getting traded. It would be very difficult for banks to get this traded, and alternatively the problem would be the payment gateways as well. Like yesterday we saw the payment gateway in Singapore, whereby if you pay via the Bitcoin or any cryptocurrency, that payment gateway is accepting. So payment gateway will change. Now this would put up an issue for the bank. Reason being, today banks payment gateway except Alibaba, which is basically Alipay, which accepts the Bitcoin and cryptocurrency. Apart from that, I don't see any bank accept that cryptocurrency. So we really need to see that how exactly things would be moving. Apart from that, as far as the middle office is concerned, I don't think that 3 to 4 years down the line the middle office will stay. It would not wind up. Middle office will align with a new office, which is risk office. So good banks of the globe like Goldman Sachs and other Chase and all, they have fresh office in their domain, which is risk office. Actually, most of the people do not know what exactly the middle office do. So the middle office is actually nothing but they do the regulatory part. But they do the regulatory which is already matured. Example CCAR, Comprehensive Capital Analysis Review. Example benchmark regulation. Example Basel 3 and all, which is already matured. Or not more than 5-10% changes are there. But actually, if I go with the Einstein Young report that after every 7 minutes a fresh regulatory is coming, even I take this 1 hour, then one day is having 24 hours, so approximately 24 fresh regulations are coming. Effectively mean that for a bank it is difficult to adopt the 24 regulation. You must be thinking why banks need 24 regulation, because banks like Goldman Sachs, Credit Suisse and all, they are actually working across the globe. Since they are working across the globe, basically they are ubiquitous bank. Standard Chartered, JP Morgan, Chase and Credit Suisse, UBS, they are ubiquitous bank. They are working everywhere. They need to adopt the technology. They need to adopt the regulation by the local regulator, and regulation change. Example 610. MS 610, which is risk aggregation and statistics reporting, is only imposed by Singapore. So it has nothing to do outside Singapore. But does that mean that Goldman Sachs and top banks will say no to it? No, they have to take this into consideration. And of course, taking this into consideration would have a separate job. It involves a UAT, SIT. UAT stands for user acceptance testing. SIT stands for system integration testing. CRP. So it's not an easy job. It's a very tedious job and subject to huge interpretation issue between you and the regulator. But that is exactly not the role of the middle office. This is the role of the new office, which is risk office, who will assess that whether what would be the quantitatively, not qualitatively, but would be the quantitatively impact we are having that on the bank books. I see that few years down the line, uh, the requirement for middle office would be very very limited, and I think 10% job cut might be there. But I see that what good banks would mixed up, or they will merge the risk office into the middle office, and this would be termed as a risk office. So middle office, which is currently a separate office, would work under risk office, while front office would continue to be there. Front office would continue to partition like forward, option swaps, deliverable, non-deliverable, IRS, OIS, FRA and all. So front office would continue to be, but yes, automation will take at least 10% of the job. While I see that 5%, maybe 5 years down the line, middle office and risk office would be together. Back office is something where I have a very huge interpretation issue, and this is what I'm saying from several years, that few years, quite a couple of years, that back office would be history. I think that by 2025, back office would be like ICO, initial coin offering. So sitting today, anyone who is learning blockchain, you know that initial coin offering is just you need to learn, but you yourself know that this is nowhere applies. So no one doing any ICO. People are on the STO. Although my personal interpretation is that STO, which is security tokens offering, is a fancy name of an ICO. The real issue is the DSO, which is digital securities offering. But we are not here to discuss that. I see that 5 years down the line, back office would be winded up, and unfortunately, if we look at that, Goldman Sachs captive in India, Credit Suisse captive in India, Goldman Sachs is having captive in Bangalore, and while Credit Suisse is having captive in Pune, and I think Barclays is in Pune. All three are under trimming. They are trimming their workforce. The reason is that the business is getting low. The reason is that due to the automation, the same work can be done at a substantial lower cost, and bank margin is under threat. So no bank wanted to have 3%, 4% margin. They want good margin. After all, you're not doing the banking business for the commodity. You're doing banking business for money. So there's nothing wrong in it if you expect 10-15% margin. So I think that 5 years down the line, back office would only be in the books, or maybe we by the time today I'm 35, I would be 40, then I would be veteran, and I would say that we started when back office used to be there, but now back office is not there. Apparently speaking, if I conclude this video, then banking is set to change. 3 years, 4 years down the line, we have thousands of chop ups would happen in the banks. These chop ups would have, if you allow me to have a pie diagram, then this chop up would have majority from back office followed by middle office. A very less front office would be in minority. Not much people will lose the front office because they are functionally very technical people and very difficult to find the front office people. So with due respect, if you do interview of 100 people in front office, maybe 10,000 people in the front office, you end up only one. This is the level of a front office people we want. And on the contrary, if you do the 10,000 people, you will get at least 10-20 people in the middle office, while back office 80% people are suitable for the back office work out of 10,000. This is what I see the banking would be. To cut this long discussion, I see that Singapore would surely get a hit in banking. In fact, they need to change their business model, and I think they are doing it right now. Uh, Monetary Authority of Singapore is in constant touch with banks, and the changes are happening underneath. And because Monetary Authority of Singapore is very clear of the fact that if say and Singapore has to be there, because the core of the Singapore is the banking has to change. While I have the similar views about Hong Kong as well, because it's not that we are heading to Hong Kong after 20 days, it is because Hong Kong Monetary Authority is also the competent forum, like we have MAS, but MAS is having several advantages over Hong Kong Monetary Authority, which Hong Kong do not have, unfortunately. Hopefully over the period they would have that, and we see a very good competition in a professional terms, a healthy competition between two regulators. And I see that Hong Kong banking will also change. I'm not sure about Chinese banking, but because there are a lot of shadow banking operates in China, so as in India. But Chinese banking would change on a technological front, that I'm sure, because Chinese government is pretty devoted government as far as the technology is concerned and functionality is concerned that we have saw. Of course, non-performing asset is a problem for China as well as for India, but for India, the more problem is the functionality and the technical and the information technology part in the banking, which certainly cannot be resolved in a day, and no action has been done by the banks as yet. To wind up this video, I see that 5 years down the line, approximately 30-40% of the banking might not be there, but we have today. Well, everywhere we would have chat boxes, AI-enabled chat boxes. Chat box would be a fashion soon. You know, I see that middle office might not be there. It would merge up with the risk office. We also need to see that how the fundamental review of trading book FRTB would look like. It's hitting 2022, and this is something which is a very testing point for banking, to be honest. I see that fundamental review of the trading book, if bank fails, then scene would be tough, because in MiFID second also bank fails. The banks were not been able to comprehensively meet the expectation of regulator, but this was about reporting. It was not having any P&L impact. So failure of the MiFID second do not end up any kind of recession or depression or something, or a market hit. But if fundamental review of the trading book would hit, then show would be little tough for the banks. And we should not forget that October 2023, all the Basel norms are getting active. Several people calling this as several people are calling this as test amount. I also see that test amount. But to be honest, next 3-4 years is pretty tough for banking. And to cut this long discussion, if you are not a functionally competent people, then surviving in that tough position would be little tough. Maybe you will also chop off. I see that Treasury Consulting is having a wonderful opportunity, and of course all the consulting companies including Big Fours, we all have a wonderful opportunity, as a lot of action is happening around. We can participate provided we ourselves are functionally competent, and which we are, and we are entering into the now blockchain, machine learning. We are launching a product in the machine learning, in the equity, in the energy derivative space by 2019. So banking, risk strategies, offices, everything around to be changed. I think testing time is ahead, and as an entrepreneur, I would say that interesting time is ahead. To wind up this video, I wish all the best to everyone who is in the banking domain. I think that to cut this long discussion, that to comprehend this entire video, that I think it's a very strong or very great opportunity which every one of us is having to monetize that. And those who would be able to monetize that opportunity, they would be remembered for very long. Because if we are able to save ourselves in the next 3-4 years, then I think we would be able to save ourselves till 40-50 years. While those who might not be able to, they have to face the dead end of the road, whereby probability is very high. With this, I would like to thank you very much, and would also like to appraise you that Treasury Consulting is not very far from launching the videos. It's just few days. The Maverick Treasurer is right there, 25 Sing dollars per issue and approximately 130, 135 Sing dollar per year, 6 issues. I would like to thank you, Singapore, for giving us an opportunity. It's wonderful that we learned a lot from Singapore. A lot of action is happening around wherever we go. It's this. I think this country is all about action. A lot of action is happening. So no talks, only action, which is the beauty of the business. Every businessman loves to have action than talks, and I think Singapore is a place where a lot of action is happening in the banking space around. And we thank you to the government of Singapore, and special thanks to the Prime Minister Office and the Monetary Authority of Singapore for doing too much action around. And thank you very much for which giving us that privilege to be a part of Singapore. With this, we thank you very much. You know my mobile number 919899242978, and our fixed income platform. All information right there, www.fixedincome.global. Thank you and have a wonderful time ahead.